Thursday, January 14th, 2021, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to say that I've been posting more stuff on my blog. I used to post an article that I would write maybe every 2 or 3 months there. But now that I'm not on social media like Twitter, I'm posting more ideas that I have, some interesting photos you might like, articles from people like Rafi Farber and other things that probably would get me censored as well on YouTube. I wrote a really interesting article in June of last year about the World Economic Forum and the Great Reset. If you want to read it, it's got almost 10,000 reads, which is quite a bit for me. But today, I want to talk about why would the bullion banks, central bankers, want to manipulate the price of a pet rock, something that people think is not important anymore, and that is gold, of course. And we talk a lot about gold manipulation in the alternative space, in the sound money camp as well. Yes, there are some that are into gold who don't believe in it. They think it's a conspiracy theory, but I think now with everything that's happening in the world in the last almost 12 months, it's not out of the realms of the possibility, right, that they do that. And I noticed that many years ago, back when I started buying gold and silver, when I got interested in it, and as many of you know, I was in the city of London. I worked in the belly of the beast for 20 years, and gold and silver were not the markets I covered. I worked in the government bond market, really. In the beginning, it was a government bond in the cash market, and then in the derivatives market, futures and options, which is exchange traded derivatives. So, but I started noticing patterns in the price of gold and silver when I started following it, and that's what led me to look into it. So I have another story, interesting story. I don't think I've told any of you this story, even though I've spoken about the FT article or editorial from 2004 when gold was at $400 and they were bashing gold. It's called Going Gold. The pointlessness of holding bullion continues to sink in. So if you want to read this editorial, just pause the video and do a screenshot of it and read it, because I'm not going to go over it today, but it's just an example of how the globalists and their mouthpieces like the FT manipulate gold, and I'll come to why they do it in a minute. But I want to give you another story, and it's to do with the FT as well. I had a very good friend at work at MF Global. I worked at MF Global when I went to work there in 2004. It was called Men Financial still. It was a privately owned company. MF Global was when Men Financial spun off from EDF Men and went public in the stock market. Was listed in the New York Stock Exchange. And I worked there till 2010, and I started talking to this colleague of mine who used to work in a different department on the other side of the office, but he used to come around and talk to the guy I worked with. And we started chatting, and I got him into gold. And he was already reading stuff from the Austrian School of Economics. So we became really good friends. We used to talk a lot during lunch, or when we left work and we were walking to the station. We used to talk about things like I talked to you about. And he got an invitation from the FT in 2009 to go to a gold conference, and he could take someone else. So he brought me along, which was really nice. And I remember sitting there, and there were a lot of bullion bankers there, a lot of fund managers, and there was a big table at the head of the conference with with the organizers there, the people who were going to speak, and they allowed the public. There weren't that many people to ask questions, so I got up and asked my questions. Well, I actually gave my opinion that it would be also good to buy gold sovereigns, physical gold, because it was tax efficient, no capital gains tax. I even mentioned that it was legal tender, and that really annoyed the people that were organizing this conference. They said, "Oh, we're not here to give tax advice." They basically shut me up, and I just sat down, and I thought, "Wow, what's wrong with that? What's wrong with them?" So yeah, the FT, the bullion banks, what that showed me as well is they don't want the public to know about physical gold and buying 1 or 2 sovereigns a month. They want you to stay in their financial system, buying their paper products, which probably have no gold backing to it. Well, which we know it doesn't really have any gold backing. And if you do ask for the gold, they're very reluctant to give it to you. So that was another experience with the FT that I wanted to talk to you about back in 2009. So that was 5 years after 2004. I said that gold was not important anymore. And here they are in 2009 doing a conference about it. So the other quotes I'd like to give you from central bankers and people involved in politics is from JS Mindset. He's got it on his website. He's got a quote from Eddie George, who was the governor of the Bank of England at the time in 1999, when the Bank of England dropped 400 tons of gold, or 50% of the UK's gold, onto the market with the famous Gordon Brown bottom. And this is a quote that he's supposed to have made. When looked into the abyss, if the gold price rose further, a further rise would have taken down one or several trading houses. Well, read Goldman Sachs, maybe JP Morgan, which might have taken down all the rest in their wake. And this is not just London, this is New York as well, because the major banks on Wall Street and London are the same. Therefore, at any price, at any cost, the central banks had to quell the gold price, manage it. It was very different. It was very difficult to get the gold price under control, but we have now succeeded. The US Fed was very active in getting the gold price down. So was the UK or the Bank of England. So how do they do that? And why do they do that? Someone asked me yesterday, someone who's been following the channel for a long time, and I was surprised because I thought by now people would know, but I'm not having a go at anyone. The reason they do it, and I highly recommend you read What Government Has Done to Our Money to understand the nature and the origin of money in gold, especially, and silver as well, is because a price of gold and silver rising too quickly and getting out of control is a signal that their system, their currency, their paper currency is in trouble. So, and their paper currency is always in trouble once it's like unanchored from a sound money system. And they know that. And that's why they don't try to keep it at $35 an ounce. Which is where it was in 1971, because they can't do that, because with the inflation that they create of money and credit, it's impossible to do that, because people are not that stupid in the end of the day, and they will basically clean them out of their gold. So they need to let it keep rising, but they need to control it. And why do they need to control it? Well, if you look at the analogy of the pot of water, the boiling pot of water, and the frog, if you turn the heat too high and boil the water very quickly, the frog is going to jump off. So this is the same thing. They want to keep us, the general public, investors, in their system. They don't want them to get out of their system and protect themselves. So they can't really allow gold and silver to get too popular. They need to control the price, manipulate it sometimes, have days where they bash it down like $70. Recently we saw gold and silver like 10% to make it look like it's risky, so people get put off. But in the long term, there's no possibility of them keeping the price suppressed, unless of course they start raising interest rates, reining in the inflation, which we have in spades. Learn the definition of inflation. I've done many videos about it. I'm not going to go over it today, but there's another book that I've spoken about before, and it's called Gold Wars: The Battle Against Sound Money as Seen from a Swiss Perspective by Ferdinand Lips. Ferdinand Lips, he died, I think, in 2005. He's from Switzerland. He was a banker in Zurich. He even worked for the Rothschilds. But this is what he said in the introduction of the book. It says, "A gold war is an attempt by the government upon the constitutional rights of the individual. Why do governments resort to gold wars? Sometimes they want to wage shooting wars without raising taxes. At other times, they want to indulge in social engineering." Sounds familiar? I mean, this was 15 years ago. "Through the redistribution of income, but in every instance there is one common thread. Governments have correctly identified gold as the only antidote against their effort to build the Tower of Babel of irredeemable debt." Well, this was very prescient, I would say, because this was in 2005. Look at the Tower of Babel we have now. That wouldn't have been able to been built if it wasn't for the control of the gold price. Yes, it's gone up since then, but it's gone up in a controlled way. It's had shares of up and downs that have put many people off the market, but nevertheless, gold has gone up on average by 10% a year since 2001. But most people have missed it because the investment managers, the people who are supposed to advise the public about pensions and everything, they don't see gold as being important. And that's just how the powers that be want it. And that's why they control the price of gold. They manipulate it, but in the end of the day, they will not be able to prevent it from going a lot higher, because it's impossible, because they're keeping the inflation spigot going. So that's why they do it. If you have more questions, just ask in the comment section below, and maybe I've missed a few things. But yeah, that's why they do it, because they don't want the general public to be involved in the gold market. So the bullion banks, for example, every so often they all come out together and they give their forecasts for gold in the next year or so. They give an average. And for example, last year when gold was at 2,000, they instead of coming out and saying, well, we think gold could really go up, they would say, oh, we are bullish gold, but we think gold is going to be around 1,800 next year. And then in 2022, it will drop back to 1,600. That's how they are. And the other thing I'd like to point out too is that the Fed and the Bank of England, or if you want to call it the UK and US governments, they have the wherewithal to manipulate these markets. In the US, it's called the Exchange Stabilization Fund. You can look it up on Wikipedia, and it was created in 1934. just after they confiscated all the gold, of course, in 1933. And this fund is probably one of the biggest hedge funds in the world. And the U.S. Treasury Secretary is in charge of that, Steve Mnuchin, and the president. And what happens when the Exchange Stabilization Fund calls JP Morgan, which is the banker to the Treasury? Well, they'll say, we want to sell gold. And what that will do as well is that the bullion desk will see the light flashing. Oh, that's the Exchange Stabilization Fund. And they will basically join in. And the Treasury doesn't mind because they're helping them as well drive the price lower. And in the UK, we've got the same, but it's called the Exchange Equalization account, and that was established in 1932, and the UK went off the gold standard in 1931. So it's quite interesting that those funds were established in the UK a year after they went off the gold standard in 1931, which they had gotten back to, I think it was around 1925 or 6. And in the US, they created it a year after they went off the domestic gold standard and confiscated gold. So there you go. There are a lot of people that I respect out there, like Bob Moriarty. I follow his website, 321gold.com. He thinks we are crazy, that there is no gold manipulation. But I beg to differ with him. And yes, the price of gold is going up. And it has gone up since 2000, 2001. But it's been controlled by these people, because if it wasn't, we wouldn't be, the world wouldn't be in this trouble that we're in, with this Tower of Babel of debt. We wouldn't have the wealth inequality that we have. But I frankly don't think going back on a gold standard or would be possible unless the powers that be got religion and actually acted in the interest of the people. So you have to be on your own gold and silver standard. You can't wait for the politicians to bring it along, because I don't think there's much hope of them doing it. And if they do bring in a gold standard or some kind of gold back system, you can bet that it's going to be downhill right from the beginning. Not right away, like in a day after, but it will eventually disintegrate, because governments and politicians, they always cheat and lie and steal, right? That's what they do best. So yeah, we are under basically almost total lockdown here in the UK, probably until April. That's what they've told us. It might change. It might get even worse. They're talking about only allowing us to go out once a week. Today, of course, it wouldn't have made any difference because it's really wet out there. It's raining really hard. It's been gray most of the time here, so it doesn't really matter. I guess we can stay in our private prisons for now. So before I finish, let's quickly look at where the markets are this morning. It's 8:34 a.m. London. We've got spot gold at 1841. That's down about $4. The 10-year yield has dropped from almost 120 a few days ago. It got to below 110 yesterday. It's not surprising because they had a lot of paper to sell. The Treasury had a lot of debt to issue. I think they had 30-year bonds yesterday. I'm sure the ESF, Exchange Stabilization Fund, has been very busy of late. And have you noticed yields have dropped from almost 120 to below 110, and gold is actually hasn't gone back up. All that talk that gold was going down because yields were going up, right? So silver is down about 2 cents at 25.20. So the markets are fairly quiet. I see here though that the low overnight in gold is 18.28. So they have been like playing around with the paper price. The stock market, yeah, the Dow is up 100 points, 1/3%. The future S&P is up 1/4%. NASDAQ 100 future is unchanged. the fiat currencies. Sterling is up a little bit, 136.60, up 0.15%. Euro is unchanged, 121.50. The dollar is up 1/8% versus the yen at 104.01. Copper is unchanged. WTI crude is up 1/3%, but at 53.13. I think we were above 54. Was it yesterday or the day before? So commodities have moderated a little bit, but I expect the same thing to continue. The trend, I think, because in the short term there's a lot of choppiness, but I think the trend is for higher commodity prices, a lower dollar. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Facebook, Hive, Steemit, DTube, Library, and BitChute. And as you know, I've deactivated my Twitter account. So with that, I wish you all a great day. Take care. Bye.